So please.
All right, hey, Dave Knight here at 123daytrade.com. Thanks for watching. Thanks for being here. Let me mute out.
Volatile markets, it's not a good thing. You want to walk away. You want to,
All right, so today is March 2nd, Friday, March 2nd, 2018. I have, just so you understand, I've passed. I took a 5-tick trade early just for the heck of it because I need it. I knew that I had, or excuse me, I had a 5-tick stop loss, and unfortunately it went there to it. And this right here is the entry that I woulda, shoulda, coulda had with the open, and this print right here. This ends up being the highest volume bar on the open session. So I would have attempted to fake out right here with a lower high pattern, and I would have it basically sitting right here at 93. It's already run a 1p profit target. So this is the trade that I would have put on this morning on Friday if I was going after a full with a full stop loss and whatnot. And today I would have been at 10 or 11 as far as the stop today, not 5. So, and you can see it sets at 4. Actually, I inputted the entry at 4, and I got 1 tick slippage, I believe, at 5 ticks of loss. So that's why I want to be careful and cautious. So you only need 5 days to move past the combine, and today is day 5. So if you look at this number, it's $29.30 higher than where I need to be, and there's no reason to trade anymore. So I took, I went after basically a 1/4 hour stop today. It was 4.5, so I was at 4 to 5. 5 would have been hit. Actually, I think it was like 8 ticks of stop that would have taken out. So anyway, long story short, hopefully this makes sense. The object is to move to the next stage, not to screw around in the combine. So you only need 5 days to get on. This is day 5. Take my small loss. I had 4 days of wins, 1 day of loss, and I moved to the next step. So I started this combine on Monday. Monday, Tuesday, Wednesday, Thursday were all positive days. And Friday today was a small loss of 50 bucks. It looks good on the combine report that, hey, I'm managing risk. So that's always a good thing for the performance coaches to see. Anyway, long story short, this is where, if this entry right here is what I call a fake out, and I guess we can go over it while I have time, and I'm just sitting around doing nothing really. This move here, you think, oh, it's making a higher high. No, it's not true. If you go this way on the chart, which we will in just a second, you're going to see there's some higher highs up here. And they come in earlier, but they're higher. Here's 60.09, 60.94 and 5 up here. And then you see early at 5.17, 61.09. I mean, maybe it's easier to see it this way if I pull over the 15-minute chart and you can see it this way. Now, by the way, 2p target on the next one down is 60.50, and a 3p target 60.27. So basically looking for the market to go back to the lows of yesterday is the thought process here. So here is the high of the session right through here. Well, actually, that's not really the high. The high of the session was printed at 5, right at the open of the bar. There's your 60.41 high, or 61.40, excuse me. And then you can see we've made this whole morning has been, with the exception of this little bar right here, and then the doji close here. Look at that. That's what you call a shooting star. So you see a shooting star and then the down, and now you see this mark right here, and then you see this here, and then you see this right here. So reds and the higher, the lower high pattern. So if you go and just look at where the highs are against the lows, let me just blow this chart up first. This will make more sense this way. It's kind of a little bit of the science side of it plus the art side of it. And now I need to move the chart over. Alright, so let's, you can see your 5-minute, 15-minute chart, and that's the 5-minute, the 200 bar SMA. Now you can see that here's a high. This is the only one that gets broken right here. This goes to it, but it just goes above it briefly and it closes here. See where the close is? The close is all lower, all lower, all lower, all lower. So the odds of it following the path of least resistance. So the path of least resistance right now is the continuation of the down, unless there is some capitulation and some volume down here, and then it could run itself back up. So that's what I see, and that's what I would have traded. So by the way, this was the break-even stop after running 1P right here. Here's a 1P move, and then I was at break-even plus a tick here. The market went to 91. I was sitting at 93. It would have ran me out with a 1-tick gain, and that would have been the end of this trade. It could have easily done that and knocked me out just as much as anything. That's the power of the fake out, though. The fake out could show an early entry. So the fake out, basically when you're looking at a fake out signal, what I'm trying to accomplish is find an area that looks like if it busts through, since it only went up higher, if you look at this right here, 94 versus this right here, 6102, it just barely briefly moved up over here for a little bit, and then it moved itself this direction. So the odds of it coming back down and then seeing this helped make a decision for me that I wanted to follow the path of least resistance. Pivot point is up here, and our S1 is down here. So taking a fake out in the direction of this short side, as long as we stay below that pivot mark. So pivot is up here, S1's down here. I like taking that fake out. I will take a fake out off the open and make a move. So that would have been the trade setup today. I felt quite confident that I would have caught this. Now, whether it makes any money or not, that's not in my control. What I have in my control is how I would manage the trade. So at this point in time, what I'd tell you is I'd go using my blue line now plus 5 ticks. So I would look at 82 being a stop now. And since I don't like being on even numbers, I would tell you I'd be at 83. And the targets that I'm looking for the downside is 60.50 next. That's a 2P move. And then the 3P move, which would be an awesome trade at any given day. Market moving 3P in your direction is 60.27. So that would probably be right there where I would be at least, if I was trading multiples, I'd certainly be out on at least half the position down here at the 27 mark. Today, and that's also a great place to probably exit on the Friday as well. The Gann signal, by the way, today is 60.15. So there's not a lot of room to negotiate the magic number today from the 3P number right here. So what I would basically do is try to hold through the move to see how far it falls, and then once it got down here to the GAN 6015, 6018 level, I would be protecting right here at the 3P mark. So what I'm trying to say is I would allow the market to do this and then try to see on the way back up is where I would try to get out. If it would do this and then come back up here, then I would at least get a 2P profit target, if not greater, using S1 as a support line that I don't want it to break through. So hopefully that makes sense. So let's see how this plays out today. Notice that we did run a 2P target there. So it's moved 44 ticks, 45 ticks in my favor. And if we're falling behind here, we want to be, looks like 79 now. So we're falling behind at 79, looking for the market to continue to make its move. Now, once it gets extremely close to that target, meaning 3P, then I'm going to be really close to this level. So I give it some room in front of what I believe it can be moved and can be taken out. I do believe the lows can be approached here. The low, I believe, yesterday was 60.18. So I mean, I think that the market wants to go back down that level, to go try it out again and see what's there. Along the way, you have to run into 60.27. So it's a fairly good opportunity to take this on today. And you can see the low now, prior was 60.53, now it's 60.49. So we have made a new low on the session, meaning our American session. America! Make America great! So hopefully that is what, some instructional. And basically what I'm doing is following behind this now, especially on a Friday. I want to follow behind this, probably be at 77, 70, around 77 right now in this area. I would be cautious about, well, I might be sticking at 79 until we break through right now. Looking back here, I would think if the market could retest up through here, but I want to be out if it goes above this minor support or minor resistance area. People ask what I have on my charts. I got 4 monitors plus one that keeps up with Top Step and my music and whatever I want to listen to. But I think you can make your trading station work with 2 monitors. I've said that over and over again. 2 monitors is plenty, especially if you're not recording it. Or if you're recording yourself, then that's good too. Get a recording platform. I like to keep up the 15-minute chart and the 5-minute chart. The 5-minute, I don't normally change this ever, but this is the chart that I'll go and look at hourly. I'll go look at my 15-minute chart is what I'll shift to look at the dailies, hourly, and 15-minute. So that's the levels that I don't go as far. And then I have my 89 tick chart, right? So that's what I'm looking at. And the tick chart is my, we're making a move here, hold on. Now since we broke through, now I'm okay with coming down now. We broke through this level here, now I'm okay with going underneath these lower highs. So now I'm just trailing. This is 71. So I'd be about at 77 now. Seeing how much profit I can get on this trade. you're expecting these kind of violent moves, fake outs, you think, wow, this looks like this is the kind of signals that used to that I would lose money on. I'd look at that and I think, boy, that looks a great place to be long. Because look at this right here. Look at the power coming up. Then I started noticing that I talk about my Ziggy man, right? So here's Ziggy right here, and it just goes this way more times than not, especially when you are, the reverse works as well when the market's going up and then it comes back, and then that's when that works more times than not. But this right here is just an opportunity to short the market a lot of times. And the market has, the crude, at least the crude oil market, since I am specifically trade just crude oil, I can tell you this kind of move happens for one reason, in my humble opinion, why this happens. And it doesn't, logically, it doesn't make sense. He goes, well, but think about this. The market's got to move up to move down. So, in other words, if you think about it, is it easier to, with momentum, if you're here, is it easier to go through this way, or is it easier to jump it up and then drive it through like that? If you can get momentum behind your way, then boom, 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 then you can actually make a run lower faster too. Momentum will pick the market up and it'll drive it even harder down. And then the reverse is true too, right? You start seeing if this ends up doing this, so like, and then maybe the fourth time, and then it takes off, then you know that movement's over. Or it does something like this, and it continues to move up, it might do that. But you got to be careful about that too, because this can be a fourth time coming this way, and then it shoots down that direction. So Gann is one of my all-time favorite signals to try to catch the short, watching the Gann fourth time through. And then it pops down. So you have your 1, your 2, your 3, and that fourth time sends it off, but it looks like it's making a move. And time related, it's like the time here might take, say, 20 minutes to do this, and then it does that in 2 minutes. So now it's already made a new low. Look, there you go. Pushing to new lows. 66. Now we got the ability to move to 71. So we just used the blue line to exit. That's how I handle my Fridays. Because you'll find a lot of Fridays that there could be one momentum driven move and then it kind of chills out. Except with the exception of third Friday of the month, when options are expiring and the futures are moving from one to the next, like the 16th of this month, that's a great day to say, F you market, I'm not giving you any of my money. I like to take a 3-day weekend on third Friday of the month if I'm not having to just do a one-tick trade like today. If it wasn't for the 5 days in the combine, I wouldn't even have most likely even turned on the computer system today, because I had already had enough profit level to not worry about trading. So I could, put my mental cap to the corner, grab a good book, watch a good movie, go out with lunch with some friends, So now here's a question I run into. When the market's moving like this, should you move your stop closer? No. Keep your profit stop where you had it prior to the market doing its retracement. So right here is right here. So 69, 67, right in this area is where we were looking. 67 So what I would tell you is I would be wanting to be at 72, 73. So now I'm looking at this against this, and that's the level that I would say 5 ticks from. I'm not looking here anymore. I'm looking back at where this low is and where that market was at. So now I'm looking at 73 being a stop. So that's where I would have adjusted to. Because people say, hey, you move your stop all over the place, here and there and the other. Why? How do you, and that's what I'm looking at. I'm looking at this press here, and then I'm saying, whoa, 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 wait a minute. All right, so, and there's no exact science to it. I'm just trying to stay in the trade itself while allowing the market, because unfortunately, if the market comes like this, and this is the 200 bar line, right? And then it comes back under and then makes this move, well, you don't want to be in the trade anymore. All of a sudden, the momentum's taking you this way, and it could just as easily go and run to the highs up here, 61.41, and go up there and take that out. Now you got to also remember that if you think about what the market's been doing, it's been doing this kind of things. It did it here. It popped its little head up here. And you hear me talk about prairie dogging it too, hopefully sometimes. So you look at, whoops, that's a terrible line. You see this right here, and there's your prairie dog, right? So it prairie dogs a little bit, and then it goes this way. So the prairie dog looking up over, hey, here's your prairie dog looking, and he's saying, is there anything going this way? Well, it looks like it's going like this. Is there anything going this way? I don't know yet. But boy, I tell you what, I don't see any birds in the sky up here. Okay. Oh, no, there is one. I duck my head back under. Boom, down it goes. I don't know. Visualization helps me. So this is kind of the stuff that I you get people ask me, what's the course going to consist of? This kind of information. Maybe even some live trading if I feel like doing it once a week. Maybe we'll use Wednesday, the inventory day, as our daily trading session, and maybe it'll be we'll have like an hour of training early, or we'll have an hour afterwards. We'll trade the inventory report, and then we'll so we'll hour instruction. So it might end up being, or you might get some bonus time, like since we're in a trade, to be able to sit and talk and ask questions or whatnot. Demio is a pretty interactive service, so I hope maybe that answers some questions about what kind of things that you can expect. So some live trading instruction, along with some just my gift, and then going 4 or 5 weeks out, and then we'll cross that next bridge together or not. So it doesn't, hopefully, if that's all you need, then good. Maybe you only need a little one thing or something to get yourself back to moving from losing to winning. Maybe just that one extra component that you need. I firmly believe that you can learn, something from everybody, even if it's something bad. From anybody, so at least you'll learn something along the lines that, hey, that's not the way to do it. By the way, here's a Gann signal cutting into prices here. So we talk about the fourth time through a lot of times, huh? So that could be 3. So it might move up one more time and then shoot down, or this might be the point that it shoots. So we're holding at, you know, I mean, I would tell you you're holding 5 ticks higher than this on an odd number. So I would be on 73 still. 73 would be my exit. You know, if the market wanted to come over here, now you might find that 7 ticks works better or 3 ticks works better. I mean, it's all a matter of how you want to do it. I mean, I will adjust my stop. I'm still in a profit, even if it takes me out here, you know, at 73 or 74 or 75 or 7, even set, you know, I'm in at 94, so it's still a winning trade no matter how I adjust that. And I want to make sure, you know, I would say that I don't want to be any more than, say, 10 ticks higher than where this was up here. So maybe I'm no higher than 78. So if that's your comfort level, then you can do that. I find a point where I want to be out of the trade. You know, is the volume showing itself? Here's the 4th time, by the way. So here we go. 1, 2, 3, and this was the 4th time over, right? So you see the 3 times, right? 1, 2, 3, boom. Now you could say this is still the 3rd time. So it's still science, right? I mean, excuse me, art. It's art of seeing things. And what I would get caught in, by the way, I would get caught in these kind of moves thinking, oh, the market looks like it's building a base, and the only thing it was doing was forming what I would call a triangle. It was forming this kind of triangle. Excuse me. It was forming this kind of, let me redraw this. So it's forming a triangle, and then the odds of it completing the triangle are high. So there's your triangle completion right there. And technically speaking, with the algorithmic traders into the market now, you know, people complain about them, but the hardest part of being a trader right now is having to sustain in the crude oil market, having to sustain these moves, coming back against the grain. And you think, what the, I mean, what, you know, WTF, man? Why are you going up when you should be going this way? Quit screwing with me and just go down already. Now here's 3 times down here. So right now what we're seeing on this right here is we got a triple bottom. This could be a sticking point that sends the market this way. But if it doesn't, then the odds of that 4th time going through this triple bottom is really cool as far as hitting lower lows. But we're already positioned, right? So now we can look here and look at here and say, well, do we want to adjust our stop? You could. So you could take a little bit extra profit. I would probably tell you that you don't want to see it run above 67. So I would probably be sitting around 69.71. Because the GAN on the other side works too. What are you talking about, Dave? So here's GAN coming the other way. Looks like there's only really 2 right now. And here comes 3. So it could do that. And here's why. Well, here you got yourself your triple bottom we haven't been able to break through, and all of a sudden This is just getting ready to build up momentum to go this way. So that's what we're protecting against right here. I'm protecting against this doing that. And you always question yourself after you get run out, and if it does something like this, if it comes up through here, and it just barely takes you out, and then it goes this way. This is where you have to be comfortable with your stop. If you're not comfortable at 69 and you like 73 better, then by all means, you'll see me talk about what's the difference between 69 and 73, and I would say 40 bucks. Is 40 bucks worth it going down here and getting an extra 500? No. So I would go, I like 73 better. So you would see me say, I like 73 better. I want it to move 5 ticks higher, knock me out, and I don't want to be on an even number. So to get an exit, I mean a profit stop exit that's moving against me. So that would be like, all right, so fine. I end up making 94 from 73. I make 21 ticks on the trade. I get an extra $210, and I'm done on the trading day. I move away. So if I have an all-out exit right there, then for instance, if I was trading 10 contracts, I have an all-out exit right there. So worst case scenario right now, if I was trading 10 and I'm sitting at 73, bam. If I was trading 10, I'd be, I might have lightened the load up here at the 2p move. Depends on what I feel like doing at any given day. But I certainly would be all out right there. Put some music on in the background.
Don't miss out on the next market move. Trade with limited risk on Nadex.
So here we are right now. We're at that decision area, right? We've been here. So this time, is this the time that breaks through? On the other side of this, you can see this other side, right? So if it comes this way, then the odds of it going this way. So yes, it's going to break one or the other. It might peek its little head up here and then do that too. What I call prairie dogging. Looking at our 15-minute charts, it's looking interesting here. You have your push down, your closed that couldn't break through the prior. So this whole time period, 8:45 to 9:07, what is that? It's not even 30 minutes yet. But we've been down here. This is the fourth time we've been down to the 45 level. Me personally, it looks like a market that's on the brink of making lower lows here. It's going to push. And if you think about one of the technical things that you think about, this right here can be measured. So this right here can correspond with how far that market, the next leg, breaks down. So if you're looking at this area, you know, that could translate out to about, looking right here, we take this measurement, so, and you look at this over here, it looks like it could be at least a 35 to 40 tick move down from here. Likewise, it could be a 35 to 40 tick move the other way. So going from maybe even as high as 50 ticks, maybe it goes from here all the way up to 80, 90. So it's going to break, you would think, and technically speaking, it can break in relation to a measurement. And when you're measuring things, then you can measure a congestion area, and it can translate out to how far that next leg down can be. And that easily encompasses our 27 mark. You know, it's fighting here because of one reason too. Why? We needn't even talk about why it's fighting. Oh wow, what's that over there? S1. S1 is holding as support. That's why it's called S1, support number 1. Here comes the push. So how much push do we have? And honestly, it can work the other direction too. The prairie dog can be the other way. This could be just breaking through here, and they see there's not much here, and then it fires out like a rocket going that way. So it's going to move. That's why you protect yourself. Now, we made a new low. Now we can look here, and we could possibly move from here in 5 ticks. So maybe we're in this area now. Instead of being at 73, now we're at 63. That's what I would do. Lock in an extra $100 and say, hey, I'm okay with getting knocked out there. So I'm looking at this low, and I'm looking here. Here I am at 54. And I'm thinking, well, where is, so this, what do I not want to see? Well, now I don't want to see it get above here, but really I don't want to see it get above that area because it's already been here several different times. So maybe I'm sitting at 65 or 67, but I'd be comfortable with getting out at 63. And that translates out to another $100 right now. So now all of a sudden, now I got 31 ticks. I have a $310 sitting profit on this trade. That's still a good trade. Getting 310 bucks on, you know, and if you're trading 10, that's 3,100 less commission costs. That's not a bad day. Of course, you can get filled all through here. You might get 5 here, 2 here, 1 there, 2 down here, you know, by the time it all fills them all in. But it's a very fluid market. You should be able to get 10 off pretty close to where your target is. 2 is usually always right where you want it to be. And this right here can be a very strong reversal signal going the other direction. That's why I'm okay with, you know, the market just peaked itself down here. It just looked down, and when it broke, it didn't really do much, right? So here we are at 43, and it went to what, 37? You know, it didn't really drop that far. So maybe I'm holding at 67. I'll give it a couple ticks over this mark right here, or I'll just say, no, I don't want it to get to 67 at all right now. I don't want to see that. Or I might be sitting at 65. I won't be on a 5 though, because I hate being an exits on 5s on the market moving against me. I don't mind getting out at 5s on a target that I'm looking for on the other side though. It's a profit target. But my stop, you know, I'll get out on 1s, 3s, 7s, 9s. I stay away from 2, 4, 6, 8s, 0s, and 5s. So superstition maybe a little bit, but I don't mind exit on 1, 3, 5, excuse me, 1, 3, 7s, and 9s. Now here's where you'll see me moving my stop. Now we've continued the lower low pattern. 59 plus 5 ticks is 64. So 65 I don't want to be on. So I might look at 63. I might be okay with a 4 tick difference right here. Then I'm asking myself, what happens if it hits 63 but doesn't hit 67? Is $40 worth that? You know, is it worth an extra 40 bucks? In other words, I got, you know, I'm sitting here at 67. Right here, I'm at, you know, I have $310 of profit here. Now I have 27 ticks of profit here, $270. Is that worth, is the extra, you know, is the 310 right here worth the 270? And I would argue there's not much difference between 270 and 310. Be careful, in other words, of being a penny foolish. You want to be, excuse me, you don't want to be, how's the saying go? Penny foolish, dollar wise, or penny wise, dollar foolish, I guess it is. Penny wise, dollar foolish. So you're pinching penny right there, where 67 keeps you in, 63 knocks you out. So who's to say who's right, who's wrong? But I can tell you, if it gets to 67, this pattern of lower highs is threatened at that point, and it can be an easy turnaround and zoom through there, and it could quickly run to 60.94 entry point. So take your profits while they're on the table. So there's 63. So now let's see. So here's your penny wise, dollar foolish playing out in real time. $66. This is where you'll see me prairie dog. I'll say prairie dog, and I'll move up from here. I'll move to 68. I might say, no, screw that. I'm at 69 now. So here, you'll see me prairie dog. You hear me yell that prairie dog, and then I'm moving. And then all of a sudden I'm thinking, what's the difference between 25 and 27? But I only move one time on a prairie dog. And if I get stopped out at 67, I got stopped out. But I'll say prairie dog, and then I'll move up like this. I'll say screw that, and I'll move one time against a prairie dog. I'll say, all right, you effer, you came here, and I don't want to be in the even number. I was at 7. I'll go up here to 9. I'll say, all right, take me out here, because what I've noticed is this bullshit happens all the time. It comes up one tick higher than where it was, and then it goes, F you, buddy, I really wanted to go down. But I never moved the prairie dog after I moved it once. So now I'm at 60.69 and will not move. I might have got knocked out at 67. I might have not have been quick enough to move right there. And I'd be okay with getting profit. I wouldn't worry about the crap that, you know, it's frustrating sometimes when you get knocked out and then you see that market move. But when it gets close to being a prairie dog, I'll say, hey, it looks like it's prairie dog, and I will go up. Once I see that high bar right in here, I'm like, F you, man, you're not catching me today, and I'll move up. It'll catch me. I'll get caught. But now I'm sitting here at 69, and I'm, instead of, you know, I could have had 63, right? So I would have been fine in any of these exits. So there's a $60 difference between 63 and 69. So is the 60 bucks right here, holding this trade, is that worth, so in other words, is the 250 worth 310, where it could possibly be 67 today, 66 ticks. It could be 66 ticks of profit or 44 ticks of profit. You don't know yet. That's the unknown of trading. You're trying to take as much as you can away from the market while still allowing the market some room and leeway. It's tough. And if you think trading's easy, then it's easy to enter. It's the barriers of getting to be a trader are very easy. I mean, anybody can do it. Anybody can become and call themselves a trader. But honestly, there's a reason why over 90% fail. And I would argue all the time that day trading is 100% failure rate until you learn how to manage a lot more than just your entry points and your exit points. There's a lot of this kind of crap that goes on, the psychology of trading, the real money situation that you're in. So it's hard to say. Would I have been stopped out? Perhaps. Perhaps not. Depends on how quick I'd have been. Johnny on the spot. I can tell you that as soon as I saw this bar printing up through here, I would have moved up one tick. As soon as I saw this is when I would have tried to move, but I might have got hit there. It's hard to say. So maybe I only got 27 ticks. So these are the kind of trades that piss me off, though. When I get hit and it goes straight against me the other way, that's why I started calling it a prairie dog. All right, here we go. So that's what I mean about the prairie dogs right here. So I would have been most likely, if I got stopped out by one tick, you'll see me re-enter the market right here and get, sometimes I'll get hit here. But that's why, 67, 69, what's the difference? I might have looked back here and said I want the market to not get above a certain level too. I mean, there's all kinds of ways you can handle it, but just my way of trying to stay into a trade. 27, by the way, is 3P. So 3P move has been hit right there. That could be an awesome exit right there. Remember what I talked about prior though. I'm looking for the market to get down to that 18. Now I'm looking at this right here, thinking, is this as far as it's going to go? And I'm going to tell you real quick, now I'm going to come down 50. I'm going to be at, now I'm definitely coming down 5 ticks underneath this. 50, so I'm probably sitting at 53. I'm going to be very aggressive now. Now I'm at a 3P target. Now I'm trying to maximize the profit. And once it gets down here, there, just made a new low right there. Remember we talked about the GAN signal is 60.15. GAN today is 60.15 right there. So now I am protecting. Now I'm going to tell you I'm protecting here gold line now. Now I'm protecting gold line plus 3 ticks, 3 to 5. So here is where it gets really interesting. I've got my targets hit. Now I'm protecting. Hopefully the market continues to make its downward descent. But this is where I get very aggressive. I've made my 3P target. This right here is the GAN signal. This is the magic number on the day. I would definitely, if I was trading multiple contracts, be exiting at least half here or here. And then the remaining of the contracts would be off right there. I'm looking at this high volume bars and I'm saying to myself, all right, where do I want to be? 30 plus 3, 30 plus 5. Here is the exception to the general rule. Now I'm okay with getting out at a 5 or a 4 or a 6. I've already run the 3P target. I've run the GAN number. Now I'm okay with it. Now I got 33. This 32 plus 3 ticks is 35. Now I'm completely fine with getting out at 35, 36, 34. Maybe I won't go out at 34, but I'd be more than, I'm just looking here and I'm saying how far, this is the art of it, and more times than not I get knocked out of the market. But, if this is it, if this is all she wrote on the short for a while, then so be it. Now I get extremely aggressive once I got that 3P and then the magic number hit. I get extremely aggressive, try to grab as much as I can. And you'll even see me sometimes get that 3P coming across the other way. So all out exit right there, coming back the other way. And I'd be fine with that too. All of this is fine. Best case scenario is, I stay in it. More times than not, I'm getting knocked out right here at that 3P target coming the other way. So if this doesn't run me out here, we're going to call it a day anyway. I'm quite happy with this particular trade. This would have been just fine for me to be done, completed here. Downside momentum, we might see 60, we might get through it. It's a Friday, all kinds of things can happen. Anyway, so I hope that helped a little bit. It's a day that I could have got knocked out up here, so the difference being that, you know, an extra $300 are on the table here roughly. And that's what I mean by, okay, so they did knock me out right there. Boom, done. Now I'm for sure out. But is it worth it? Was being here, and that's what you got to ask yourself, is being at this level at 67 worth the 35? In this case, you know, that was what, $220. So that was a $220 difference between getting knocked out here or getting knocked out. So in other words, 25. So we ended up making an extra from, you know, so that it is what it is. So it comes down to experience right now. And my experience tells me that, you know, these kind of moves in the down. Now I'm not so great on the upside. The market is extremely much harder to predict on an up move. There's a lot more backfilling of a market, and it takes a lot more patience on an up move. But down moves, I'm extremely, I find the time to try to stay with it as best I can. But usually when you see these kind of moves on a Friday, though, this is probably as low as the market's going to get, at least for right now, until maybe later in the session, maybe not. Just never know. You never know where the low is. All you can do is do your best you can with the information you have in front of you at that point in time. So like I said, I would have allowed the market to come down, but I would have exited. So my exit would have been anywhere from here to here if I didn't get knocked out up there. All right. This is Dave Knight here from 123daytrade.com. Thanks for watching. Thanks for being here. I will be moving on to the FTP or step 2 come Monday, it looks like. I will see you then. Bye now.